feel very blessed. I'm in the presence of one of the nicest people on the planet, one of the best men I've ever known. Chuck Malamut is here. This is his weekly program all about your financial matters. The always listenable Chuck Malamut in his 26th year as the official financial advisor for the Hurley in the Morning program. How lucky is Chuck? Man, I can't even verbalize what a blessing that must be for him to have 26 years as the official financial advisor to me and to you. Chuck is the managing director. He leads his group, the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010 for all of your financial planning needs. The following program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck Malamut, I'm giving you a standing ovation today. Woo! How's the volume in your headset? You good?
Good morning, Harry.
Are you comfortable?
Yeah, everything's great.
We got the studio at 71 degrees.
It's about 85 outside with 85% humidity.
But it's 71 in here. And, you have your own headset that your brother Harry bought for you.
Harry, it was very...
It's 71 degrees.
I was tempted to text you last night just to see what's going on, but I know that you were so busy.
Well, we did the show last night, too.
Well, I know, but I know you rushed home after the show, and you turned on...
NPR.
Any of a number of networks, and I know that you're not going to admit to your listeners.
Well, no, Chuck, in honor of you.
The entire
I have a headset that one channel in my left ear, NPR plays, and in the right ear, MSNBC plays. And then I was watching, the whole convention. I was looking for a flag. Chuck, I know you have a full boatload of issues that you want to cover. I want to throw out a wild card because a very big deal. Verizon buying Yahoo for $4.83 billion. They now will merge it with America Online. This is now quite a, quite a company, isn't it?
Well, Harry, it wasn't. It's not. The buyout, from what I understand, is not just the entire company. It's not the cash and it's not the Alibaba stake. But yeah, I mean, Verizon is certainly looking to step up the game. I mean, this transaction was out there for quite some time. It wasn't as if it was unknown. Yahoo has had their fair share of problems for a number of years. And
by the way, I don't want to scare anybody, but it is my understanding if you have a Yahoo email address, and I know people, I get email from them. I know elected officials that actually have a Yahoo address. I think you lose the Yahoo address, and you're going to have to change it.
That I'm not sure about, Harry, but I'm sure the interface will be just fine. I mean, Verizon's obviously done transactions before, so I can't imagine it being an issue. But they're going to try to scale up and be a major competitor in the mobile space, media space.
I was just going to say, why would Verizon? Would you think that they would want to do this? And I guess you just said it.
Yeah, I mean they're looking for content, and they're looking for volume, and I think they're going to see that, with Yahoo. I mean, you think about Yahoo, and again, we don't like to talk about individual stocks or companies. Harry,
yeah, I'm bringing it up out of interest, not like you're recommending it or anything.
But
you're not.
The company was stuck for a long time. It just was in neutral, and they had any of a number of changes in management, just couldn't seem to get any traction. So this would ultimately, I think, it's going to be good for Verizon users and Verizon shareholders. So we'll see. Only time will tell, because sometimes you get transactions like this and they look to be great on the surface and they turn out to be somewhat of a disaster.
I don't think America Online was a very good acquisition by them.
Well, I don't think so either, but, only time will tell. I mean, Verizon just this morning announced they miss ever so slightly, I believe. I mean, we are in just the midst of earnings, which, causes a fair amount of volatility in the markets. But I find it pretty remarkable that Last week we're up again. We're up 0.6% in the S&P. Yesterday was we were down just I'm going to say ever so slightly, but you don't have that. You don't have that volatility lingering. Just waiting for the next big shoe to drop. And you think about it's been a month since we had Brexit, and think about how far we have come. And if your listeners were astute enough to maintain a long-term vision and keep their plan in place, they should be very, very pleased with the results that we've seen so far in July.
Chuck Malamut is here. He'll be with us until 45 minutes past the hour. For the last 10 minutes this hour, Greta Monahan, who's a lifestyle expert. She's a star on the television network TLC. She's a mom, and our program topic is Stomp Out Bullying, which bullying is a topic that we as a program we've been committed to for over 20 years. Bullying has become an epidemic in America, especially with cyberbullying on top of the more, traditional forms of bullying, whereby up to 43% of students in America today are victims of bullying and cyberbullying. And when you get close to 1 out of every 2, that's affecting everybody. And it's 10 valuable minutes that we're going to spend. Then we'll have Dr. Bob in the final hour of today's program. If you're just joining the program, it is absolutely humid and already 80 degrees outside as you begin your morning at 11 minutes past the hour with our official financial advisor to the Early in the Morning program, Chuck Malamut. Chuck, your market update, please.
So, Harry, as I mentioned last week, the Dow or the S&P was up 0.6%. It was a quiet week, which was great. What got us to the point of having another positive week, better than expected earnings. They're coming in, like I said, fast and furious, and the majority of those earnings are either on track or slightly ahead of expectations. And remember, we were kind of we thought we would be in that trough period, end of Q1. Q2, the earnings estimates were revised downward, and then ultimately we all believe that as we get into Q3 and 4, that earnings are going to be better. So I think if you're sort of looking forward and not driving through the rearview mirror, you should be relatively pleased with what we think is going to be happening on the horizon. So there's been a lot of discussion with respect to the banking industry, more so internationally than here domestically. And if you think about all the discussion revolving around the Italian banks right now, so we've seen a fair amount of stability in a lot of the international banks, and we've seen obviously a lot of stability here domestically. So equities seem to be a little more attractive than the very, very low price Treasury yields that, think about this for a second. I believe it's 12 to 15 trillion of debt issued internationally that's carrying a negative interest rate scenario. So if we have a 10-year that has some sort of yield component with obviously, we're no longer a triple A, as we used to be, and we can have a whole discussion revolving around that, but I think we'll probably we'll probably pass.
We can pass on that, but we know why.
But
but that still would be when a lot of these are negative yield to have a yield. I mean that we're honest brokers on this program. That's a positive event.
Oh, it is, and so we're roughly at a 157, give or take, on the 10-year. You think about it, it's made about a 20 basis point move higher over the last couple weeks, but I guess a 157 is better than a negative 25 basis points.
Absolutely,
and the fact that the debt, for the most part, is in relatively better shape here than it is, across a lot of countries internationally.
We're going to grab our first break. Coming back very quickly. We'll be back in less than 2 minutes. You're listening to Chuck Malamut. For all of your financial planning needs, turn to the official financial advisor to the Early in the Morning program, Chuck Malamut, the Malamut Group at Morgan Stanley's Northfield office. For all of your financial planning needs, you'll learn about Chuck and his team's perfected concepts of total asset management coupled with the all-important asset allocation. 609-383-2010 is the direct phone number for Chuck and his team, the Malamut Group, 609-383-2010. As we go to the break, let me just share with you, sad to report, and this is going to be an everyday occurrence until we actually have a focus on defeating the terrorist enemy. This will be an everyday occurrence throughout the world, here in America and throughout the world. A story is just breaking in the last few minutes in Dateline, France. ISIS taking responsibility for it appears, where a priest has had his throat slit and killed. So this is what they're doing. They're being shocking. They're hitting soft targets any and everywhere. I think they've been especially disproportionate in terms of the countries that have been very permissive towards ISIS, Germany and France and some of the weaker nations. And I say that with a heavy heart because they shouldn't be that way. But they better learn that nothing changes just because they take a passive approach. It's not as though ISIS is sparing them. So we mourn once again for our friends in France, because without France, there would be no United States of America. Learn your history if you don't know that that is a fact. So very, very sad to hear. And to my good friend Craig, I want to say thanks for letting me know. But in another sense, I wish I didn't know it. Chuck is going to come back in just a moment, more in terms of his market update, the global economy, second quarter earnings, additional discussion on bond yields, the Fed, and whatever else Chuck has for the remaining half hour, just about 29 minutes that we have. And I mentioned a very important segment on bullying. I want all parents, all siblings, all uncles and aunts and grandparents, please be listening, because this is going to be very instructive at how you can learn the symptoms to bullying. When all of a sudden your child loses joy or doesn't want to go to school, or, you'll see these changes when it's happening, but you need to know what to look for. This portion of our program also brought to us by the Smile Center of Linwood, Dr. Alan Chenman, perfecting the art of beautiful smiles, along with his colleague, Dr. Henry Salama. And if you look him up, Salama, you will be blown away at how not only credentialed, but how well documented. And I'm telling you, he writes amazing things for publications throughout the world. He is quoted throughout the world in terms of his prowess in implant dentistry. He has perfected concepts which make the time frame shorter, because there's a lot of healing with implant dentistry. They have to first pull the tooth, then that area has to heal. Then they set an implant, and then that has to heal. And then ultimately, and this can be 2-3 months, twice in the process, 2-3 months before you can put the implant, 2-3 months of healing after the implant, and about 6 months later, you finally can have the implant put in. Dr. Salama, I'm telling you, the man is incredible. I know his work. And when I say I know his work, I personally know his work. It's not abstract with me. They do it all. The porcelain veneers, I mentioned the dental implants, crowns, bridges, inlays, onlays. Dr. Chenman can correct the wide variety of the so-called permanent cosmetic dental problems. Check out his work. You can do it right now from your smartphone device or computer, SmileCenterNJ.com. Then at the center of the website, it's highlighted in a sort of an orange color. You'll see Smile Gallery. Click on that, and you'll see photos of actual before and after cases. Dr. Chenman is at 1999 New Road, Suite D in Linwood, and the phone number to make an appointment is 609-601-2199, because the first step towards a beautiful, healthy smile is to schedule an appointment. Contact Dr. Chenman. Shannon most likely would be your initial point of contact. Dr. Chenman, scheduling appointment coordinator. 609-601-2199. General and cosmetic dentistry, perfecting the art of beautiful smiles, right here, very, very near Broadcast Center, the Smile Center of Linwood. Tell Dr. Chenman that I sent you Hurley in the Morning, because they do keep a very active log in terms of Hurley in the Morning referrals. Back with Chuck Malamut in less than 30 seconds. Thank you, Assemblyman. We're back 20 minutes past the hour. The official financial advisor to Hurley in the Morning, Chuck Malamut, is here. 609-383-2010 to reach Chuck and his team, the Malamut Group, for all of your financial planning needs. And when I tell you, they handle it all. You want to do college building, vacation planning, retirement planning. They handle it all. You'll be very, very pleased. Their attention to detail and their follow-up is just terrific. 609 383-2010, 609-383-2010. Chuck, we will now travel the globe, the global economy. Time is yours.
So Harry, I know you're probably going to not be terribly pleased with the next comment I'm going to make.
Thank you for your confidence in me. Thank you.
But let's chat a little bit about
how well the world is doing.
Well, let's start here domestically here in the U.S. So if you look at I just know you. How do I know you ever so well?
Because you've known me for about 35 years.
Okay. Actually, it might be longer.
It is longer than that.
Okay, but let's
37.
Let's talk about the global economy here for a second. We'll start here in the U.S. So if we look at the housing market and the weekly unemployment claims that we're seeing, they are in fact trending, Harry, in a positive direction. The Eurozone Purchasing Manager Index, PMI, is just referred to, is showing some growth as well. So as we know, we've talked about U.S. equities. I'm a little disappointed I don't get the daily updates from you, the text messages when we hit new highs. So you're probably
I do it a lot. I've been busy.
Yeah, but you've been a little distracted. So I need you to get back on.
Yeah, I want to say it's been a record every day, but I did it the first day.
I do need you to get back on that trend for me because I do like hearing from you.
Thank you.
So U.S. equities, hitting all-time highs. Credit spreads, we talked about that. Ever so briefly before the last break, they have declined. And what's interesting here, Harry, we're seeing the cyclical sectors. They have been outperforming defensive areas. So those are all very positive as we look at global growth. Now, we talked a little bit about Brexit and the implications with the UK, right, wrong, or indifferent. What we're seeing is continuing weakness in the UK. And there is a very, very high probability that they could, in fact, Harry, be heading into a recession. Don't be at all surprised. So, if you look after, post-Brexit, if you look at the UK PMI numbers, they declined fairly significantly. The reading prior to the vote was at 52.4. We are now at 47.7. That's the sharpest one-month drop in history. So, you carve out, I know you can't carve out a particular part of the world, but there has been a fair amount of strength here, domestically here versus most international markets. So what is happening is you're seeing more flow of funds out of international markets back here to the safe haven, back here to the U.S.
Chuck, I really received that, very optimistically. And you know me and I know you. My dream is you take anybody out there. Now, my children are older, so they have seen financial times that are better than they've been in the past 7 to 10 years. Other than our financial markets, which I continue to be just so impressed with in terms of their resilience in the midst of just this insanity that's been going on, if you take a teenager that started at the time of the Great Recession, they've really never known a robust, great America, churning at a respectable GDP clip and all the things that we all know about. I want that. I want peace for our country and the world. I want flourishing financial markets. I want people having confidence that they can spend and that they have money to invest in their retirement. We can get there again. But it hasn't been easy, Chuck.
Well, Harry, the new norm, is as Washington wants us to accept is, sub 2%.
We never accepted a new norm until now, though.
Well, I don't think I don't think we've accepted it.
We weren't happy with 4.6% GDP in 1992.
But the fact of the matter is that we can spend the last several minutes of our time together and chatting about college and education, but we've had that discussion way too many times, and it's just so unfortunate that where we are today as a country versus where we were a decade ago.
But I'll tell you one thing: we have to do this, Chuck, and we have to figure this out. I believe in the next 4 to so years, it's a real problem. This strangling college debt on parents. I mean, I know what a Parent Plus situation is, and students that all of a sudden, if they do get a job within that year, then those payments start. You have 3 years of forbearance, but unless you're planning on dying in 3 years, this student loan debt, it's a crisis, and we have to find a way out of this.
Yeah, Harry, I'm not quite certain the solution.
I don't
mean,
either.
well, I mean, there's a couple things that immediately come to mind. The fact that you can't, most college students cannot obtain their degree in 4 years,
Correct.
which I just find, remarkable.
Well, it proves the game is rigged, and I'm
you
convinced
can't
of that.
you can't get the required classes, to graduate with the major that you were seeking.
Hey, mine took 5. I'm just being honest.
The fact,
very smart, very able, and 5 years. Thank you very much.
The fact that you get that creep upward movement in pricing. I just paid for the next semester, and I went back to my son. So my son will now be a senior. I went back to the first semester freshman year. And it's like bracket creep, as they refer to it, with respect to the government and getting you to pay more taxes. You get that same creep with respect to expenses as it pertains to college education.
Yeah.
And nothing against the system, Harry. I think college is very, very important. But when you break down the price per hour. And I know you did it. I did it. I almost fell out of the chair.
Well, it's staggering. But, you add it all up, the meal plans, the books, extra co-curricular activities, if they're living on campus or if you're paying rent for housing, near the campus. I mean, it's absolutely staggering. And it's really breathtaking for most people, Chuck, that literally can't afford this. But then you're in a really catch-22 because you can't afford not to have it. And now we're getting to the point where even when you have a BA or a BS, it's not enough. So then you have now the pressure of getting the master's, and then soon that's not going to be enough, getting the doctorate. It's a very, very serious crisis.
In fact, look, you and I are still working hard.
Yeah.
No plans on, quote, retirement.
No.
And so we've taken jobs away from that generation because we're just having a tough time producing more quality jobs that we, on a comparative basis year over year.
But if we look at how this country has run for so many hundreds of years, Chuck Malamut should be able to work into his 60s and beyond if he wants to. Harry Hurley, ditto. And I always take great pride. I created my job. It didn't exist. I didn't take anybody's job. And if I left, nobody could do my job. But here's the thing about this. There aren't jobs. So you're dedicating 4, 5+ years, and 4 is almost out the window. And I could not agree with you more, Chuck Malamut. 5 is the minimum now. And really, it's now 6 and 7 and beyond if you're going for the additional higher education. And then no guarantee. I mean, Chuck, we've talked about this before. You had jobs waiting for you. You had choices.
Harry, I think if I please don't hold me to this, but I think I saw a statistic not too long ago, 37% college graduates get what is described as a quality job after graduation. Now, I'm trying to recall what quality means. Is that where you want to be in this part of the country? Is it the actual income? Is it the benefits? Is it the ability to progressively move with an organization? I wish I had a little more information, but I was just totally caught off guard with that number.
I'm not. I'm actually surprised it's that high, based on what's been going on.
Well, it has been getting better.
Yeah.
You think about it. Back if go to the Great Recession. That we lived through, it was no one was gainfully employed at that point in time.
Chuck Malamut bringing it like he always does for all of your financial planning needs. Turn to Chuck Malamut, the Malamut Group at Morgan Stanley's Northfield office for all of your financial planning needs. They do it all. 609-383-2010, 609-383-2010. We'll be back in 3 minutes with Chuck Malamut. One more power segment straight ahead. Then Greta Monahan is going to join us. She's from TLC Network, lifestyle expert, mom, and our topic is bullying, and it truly is been a really important point of emphasis on this program for more than 2 decades. I know of examples of what this has done. It's insidious, it's cruel, and it's getting worse actually getting worse, and we have to do something about it. We'll at least talk about it coming up in the final 10 minutes of this hour, and then Dr. Bob Zlotnick in the fourth quarter. Welcome back. 33 minutes past the hour. Chuck Malamut is here, our official financial advisor for the Hurley in the Morning program. If you're just joining us, Chuck and his team, the Malamut Group at Morgan Stanley's Northfield office, are available for all of your financial planning needs. You can reach them at 609-383-2010, 609-383-2010. Chuck, second quarter earnings. What's up?
So, Harry, what we're seeing right now is that the majority of the earnings that are coming, we've had 30 going into Monday. We had 30% of the S&P that had reported so far. Earnings are beating expectations by about 6%. Revenues are ahead, which is good, by about 1.5%. So, if this pace continues, earnings per share would be on track to grow about 1.5%, and we weren't really calling out for that. And you think about, like I said, we talked about Brexit just not too long ago. Everyone was sort of beating down earnings. So to see the earnings come in a positive light is good. And I think what's really important here, Harry, is the fact that when you look at revenues, revenues are, the typical thing we would talk about, it seemed like forever. Revenue down, earnings up, because we've been able to cut costs. But now you're starting to see the top line in a lot of companies, continue, to grow in a positive way, which is great. So, as I mentioned before, Q1 2016, that was probably the trough quarter, so to speak. As we go, sort of fast forward, think about first quarter 2017, we think we're going to see year-over-year earnings growth, and that's another reason why we're seeing U.S. equities continue to, sort of march higher. I think, Harry, it's actually good that what we're living through right now is that we're not moving, in a fast and furious pace within the equity markets, because what you want to do is have some stability, sort of like 2 steps forward, 1 step back. I had a call from a client yesterday, and the call went, "I can't believe the market's down today." And I said, "Well," I said,
spoiled for so many days.
I said, "You are kidding me, right?" He goes, "No, I'm serious." I said, "Well, it's down." He said, "Well, it's down 120 points." I said, "Well, in relative terms, that's really not a big percentage move." And I said, don't expect like every week the market to end higher. It's just not going to happen." I said, think about realistically, when we do all of our planning modules, we typically use 7.5% to 8% with respect to equities, particularly your large cap growth and value type securities. But equities never, ever grow by 8.5% a year, as we know that. Now, Harry, if you went away, think about this. If you went away and you took the month of June and part of July off, mm-hmm. and you came back, I think you would be pretty amazed to see that the S&P is up 7.7%, the Dow is up 8.2%, the laggard is the NASDAQ up 2.6%, and what's really remarkable, because we've had a positive movement in commodity prices up until this past couple of days with respect to oil in particular. You look at your MSCI emerging markets, your non-developed countries, up 11.5% year to date. I mean, those numbers are spectacular compared to where we were less than 90 days ago. So if you take anything away from today's discussion, you need to be in this on a long-term basis versus if you start to try to trade the market, you're most definitely going to get whipsawed. Had a discussion with another client yesterday, and they said, well, maybe we should wait, before we make this change, or what. I said, well, why are you waiting? I said, if we agree to make the change in the portfolios, we need to act on that now, because if you think for a minute we're going to be able to time the market, you're talking to the wrong people, because if you look at total return in equities, Harry, 92% of that return is based on time in the market versus trying to time the market.
You're listening to our official financial advisor, Chuck Malamut of Morgan Stanley. He's got a wonderful group, the Malamut Group, at their Northfield office, 609-383-2010, for all of your financial planning needs. Chuck, I know that you may talk further about bond yields, and you want to close with a discussion about the Fed. Let me ask you a question, because I think you can really help a lot of people. People look at their bills, and they have to pay the cable bill because they don't want the cable to be out. You got to pay the electric bill. You don't want the electric to be out. You pay your car payment because you don't want the tow truck to come and take your car. So I think people are very good about meeting their obligations in terms of paying their debt, but not as good when it comes to actually treating savings and financial planning. To me, if you treat that like a monthly payment that you commit to making, you can really, do a great job over a period of a number of years, but many people don't know how to get started. So talk a little bit about getting started.
Well, Harry, it's like anything else. If you have 5 bills that need to be paid every month and you need to create that 6th bill, and that bill is to pay yourself.
Yeah. And
oftentimes what we do in 401k plans when we're meeting with plan participants is that if your salary deferral is 3%, for instance, that's where you start, then every year or every 6 months you need to increase that by 1%. So if you go from 3 to 4 and then 4 to 5, you think about it in several years, it's not going to take you too terribly long before you get to the potential maximum. And when you handle it that way, it's you don't get that payment or that what I don't call statement shock or paycheck shock, so to speak, where your paycheck is down significantly.
Yeah,
and it works and it works well, but you have to be disciplined enough to begin the process, and then ultimately make sure you continue within that process. Because Harry, you think about it. Look at Social Security today. The average retiree, roughly 25% of their retirement income is generated from Social Security. The other 75% you need to fund from any of a number of sources. Now, that might be your old DB pension plans. It might be 401k money. It might be your savings. It might be, might be some part-time work.
I was going to add that because now you have people working.
And now if you think about, with Social Security, there are more takers than givers. Mm-hmm. And we've had a number of discussions about Social Security is going to go broke. Well, that's not going to happen. But Social Security, as it is formatted, is going to continually to go through changes.
Did people used to be able to? I think I know the answer to this, but I want to form it in the form of a question, like I don't know the answer. Did people used to be able to retire on Social Security and actually be able to pay all their bills?
Well, no, Social Security and a traditional DB pension plan. Where you are guaranteed, a monthly payment, from the plan.
Yeah.
Those two, and you got to go back, Harry, over a decade ago, maybe even 2 decades ago, when that was the norm. As you know, most DB pension plans, defined benefit pension plans, have either, they're frozen or they're not, or they've closed out and paid out their participants in like a lump sum distribution, but. So now the world, as we talked about, the world is different. So if 25% of your income as an average retiree comes from Social Security, think about that. Fast forward that about a decade from now, I'm kind of guesstimating that 25 is probably going to be closer to 20. And then maybe a decade after that, it'd probably be closer to 15 to 18%.
And Chuck, tell your listeners your thoughts, and these are just general terms. I'm not asking you to do it specifically, but what are your thoughts in terms of, when I talk about you when you're here, when you're not here, about asset management, asset allocation? If you were able to, somebody listening right now said, you know what, I want to treat it like I have a second car payment every month, $400 a month, I'm paying myself. This is going to go to Chuck, and then I'm going to invest it in a way that is diversified. What are some of your thoughts about how to spread it out for proper asset management?
Well, Harry, I think the proper asset management starts with a plan. Without the plan or the GPS, you're not going to be able to drive to California. Yeah. So if you don't know where you want to be in a decade, and you think about it from this perspective, the average retiree needs roughly 70 to 75% of their current take-home income to maintain a lifestyle. Now,
based on the other 25% coming from Social Security.
Right. No, I'm saying like the average expense. So let's say you earn $100,000 a year.
You need
gross
75.
Yeah, and you think about, all right, so how am I going to generate that kind of cash on an annual basis? So you have to kind of back into it and say, okay, is it the $400 a month that you just referred to, or do I need to either increase that, or at the same time, take on more risk in the portfolio in order to achieve the rates of return? Now, granted, think about this. We had 2 subpar years of return in the equity markets.
And that scares people.
Yeah, and they get it comes off, not too long ago what happened, in 2008 and 9. So the average retail investor is, either has left the market or has moved into a much more conservative position, and that could ultimately hurt them as they get, into the future years with respect to potential retirement planning. So think about, again, 70 to 75%, add inflation on top of that. Now, I know government says we have no inflation, but we're really at 2.3, give or take. But, that number, Harry, that's a big number to overcome. And if you think you're going to turn around one day and say, okay, I'm going to retire in 6 months, and you haven't put any of your plans in place, then I'm not quite certain, Harry, what you're going to be doing.
People are going to be a lot trouble. They'll keep working.
And we spend more time.
Isn't that what they're going to be doing?
They're going to keep working because they're not going to retire. We spend more time with our clients trying to plan, for the retirement, and especially when clients get very, very exasperated with the equity markets. This is a long-term focus. I mean, now we didn't talk about long-term yields. We're running out of time.
Yeah, final minute.
All right, so look, I think bottom line, there continues to be a lot of inflow into U.S. Fixed income securities, because we talked about that before.
Is there anything notable about the Fed?
Yeah. Well, it looks like now. I mean, there was talk of September. And now I'm hearing, as of this morning, they're actually talking December.
That's the one I've been picking.
And very seldom do you go, right from September. You don't go from quarter to quarter. You go from month to month.
Chuck, when they haven't raised interest rates, but this measly, quarter of a point in a decade, I don't see them raising interest rates right before a consequential presidential election.
Yeah, and the other thing I think
December
about
is the answer.
Investors have become very, very complacent, Harry, with respect to interest rate increases. So, with that being said, again, if you need to sleep with one eye open, because you got to be very careful with the Fed right now. They oftentimes do things that is not telegraphed, and you're not quite certain where they're going to go.
Chuck, until we meet again.
Harry, thanks for having me.
Well done.
I know you'll be looking this evening. You got the rest of your evenings planned. Yes. Tuesday, Wednesday, Thursday, especially Thursday night.
NPR in my left ear, MSNBC in my right
Have
ear.
Have a great day. Thank you,
Chuck. We'll catch you next week. You've been listening to Chuck Malamut, a program that he presents on a weekly basis here. Chuck is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates, current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. When we come back, Greta Monahan from TLC Network, a lifestyle expert, mom, and we're going to try in 10 minutes' time to stomp out some of the bullying that's happening in our country. We'll be back in just a few minutes.